Hello, hello. I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on Wednesday morning. Abbott Labs ringing the bell at the New York Stock Exchange. I'll be talking to Chairman and CEO Robert Ford in the 10 a.m. hour. Psyched for that, Chad. Velo 3D getting things popping over at the NASDAQ. The markets are on Nvidia earnings watch to say the very least. The chip giant will report earnings after the close today. What it reports on chip sales for China, very much in focus. Also in focus is Yahoo Finance's big interview this evening with Nvidia's CEO Jensen Huang. Psyched for that one. Really, really psyched. All right, let's head down to the NASDAQ in Times Square and check out Yahoo Finance senior reporter Brooke DePalma. Brooke.
Good morning, Brian. What exactly we're seeing here is the Dow, the S&P 500, and the NASDAQ flip into the red this morning. Taking a look at the YF Interactive right now, the Dow opening down just about 0.04%. We have the NASDAQ down about 0.1% heading into that key Nvidia report. If you take a look over the past 2 days, and especially that 5 days after that larger sell-off that we saw last Friday, or rather, reverse in the sell-off that we saw last Friday, right now we're seeing some downward momentum make its way into today, once again ahead of that key report. The S&P 500 also opening lower, down about 0.1%. Let's dive into what exactly is leading stocks lower this morning. If we take a look at the NASDAQ, what we're really seeing there is Nvidia move slightly lower ahead of their key report. But year to date, this stock has had quite the run, up more than 35%, really rebounding off those lows. And this is a highly anticipated report. Ahead of this report, the stock is up more than 5%, or more than 4.5% of nearly 5% over the past month, as analysts in the street really expect the AI chip giant, the one leading the AI arms race, to really post record high revenue and adjusted profit for the second quarter. So lots of momentum heading into that report. We also have Meta, Apple, Google leading the downward momentum, offset by Tesla in the early innings here. I also do want to take a look at crude oil very quickly, because we do know that those tariffs went into effect on India. We are seeing crude oil move just slightly higher in early innings here. We know that Trump initiated a 50% tariff on Indian products, largely in reprisal for India's purchase of Russian oil. So keeping a close eye on crude prices this morning, once again up about 0.4%. But taking a step back, once again, all three major indices in the red this morning, or rather the Dow now a little bit to the upside. We're seeing a bit of a flip there, but lots of momentum heading into this week, especially as investors still try to digest Trump's attempted firing of Fed Governor Lisa Cook.
More buying than selling on the Dow out of the gate. Brooke, thanks so much. Really appreciate it. All right, so much to get to in markets, so little time. Here's what I'm watching. Number one, Nvidia or bust. Markets want a perfect earnings day from Nvidia. Anything other than perfect in terms of earnings call tone and the actual results will unlikely be met well by markets. We'll dive in with the opening bid roundtable on this important report. Number two, retailers feel the tariff heat. Results out of PVH Corp and Abercrombie & Fitch this morning highlight the material impact on profits from President Trump's tariff war. At least sales at each retailer didn't completely fall off a cliff. Number three, speaking of tariffs, President Trump has made good on his promise to hit in India with a 50% tariff rate. Markets are taking it in stride, but is more concern warranted? Here in my opening bid roundtable, Ken Polcari, Slatestone Wealth Chief Market Strategist and host of Yahoo Finance's Trader Talk vodcast. Love listening to that. Plus Yahoo Finance senior reporters Brooke DePalma and Inez Ferre. Good morning to you all. Kenny, I want to start with you. I want to come out of the block on all things Nvidia here. A very important report. How will you know if the market views this report as a perfect report? Because I would argue this market needs to see a perfect report.
Well, it needs to see a perfect report if you want to see the stock go higher. Look, here's what I say. Nvidia always surprises to the upside. Sometimes less than the expectation, but it always seems to surprise the upside, and his view is always very positive. I don't expect any of that's going to change, but look, traders are very antsy. The stock is up, as we said, this month. It's up this quarter. It's up this year. So I wouldn't necessarily take it as a negative. If they hear the news and you have some downward pressure on the stock as traders are just locking in profits, I don't think you're going to have long-term investors locking them in at all. It is the trade. It is the future. And so any pullback in Nvidia, I would view as an opportunity. Now, if it goes the other way and it's a perfect report and it's better than expected to surge by, 6 or so percent. I think that's what the option market is pricing in now. A 6% move either way. If they disappoint, we're going to go 12 points lower. If they surprise to the upside, it's going to go 12 points higher. In either case, I'm not selling my Nvidia, and on weakness, I'd be buying it.
Kenny, look, let's say it's a perfect report. I'm in a good mood. I'm going to say that's what Nvidia is going to report. Tomorrow morning, do you buy Nvidia, or do you just respect the quarter out of Nvidia and go long an AMD or some of these other derivative AI trades?
So listen, you could do both, right? Depending on what they say tonight, depending on how it acts in the aftermarket is really going to dictate what you do. If it reacts negatively tonight for whatever reason to the report, I would tend to sit back and let it see how it trades once the market gets over, right? It's a full trading market, not in the pre-market or the aftermarket, but during the day. I would wait and see how it trades to see how the news is digested. The other way you can do it, if it's a good report, is to play the derivative play. So it's AMD. It might be Palantir. It might be even Intel, right?
It's never Intel, Kenny. It's never Intel. Stop
never
it.
Well,
never
I don't
never.
own Intel. I never own Intel. So you're right. For me, it'll never be Intel. But it could be AMD, right? You could play it other ways for sure. The hyperscalers is another way to even play it, right? You want to talk Amazon, Apple, Meta. Any one of those would be a way to play too, depending on what he says about the updates from the hyperscalers. We know already when they reported their earnings last month that they're all spending tremendous amounts of money. Let's see if he has an update to that about what he suspects that they're going to spend going forward.
And as the Yahoo Finance newsroom is buzzing, of course, we have that big interview today with Nvidia founder and CEO Jensen Huang. Maybe he's going to show up with his leather coat. Unclear. I didn't get the memo. But what I do want to hear from Jensen is similar to what he said, I believe, about a year ago when Julie Hyman and Dan Halley talked to him. Just really came out very, very bullish on the state of AI demand, not just in the quarter that just ended, but he really highlighted that things are likely to stay strong over the next couple years.
Yeah, I probably will be coming with that jacket. But still, look, AI is the story of the year, and Nvidia is the poster child of it. And investors are going to want to make sure and see that the hyperscalers are still spending the way they have been spending, that you're seeing this a growth with data centers. And look, as Tom Lee from Fundstrat, Permanent Bull, has basically said that every dip in Nvidia has been profitable for investors. So if you see the stock dip by any chance, he's saying this has been it's always been profitable. There's also this idea that could we be in an AI bubble? And what Lee has said is also, look, until you see meaningful IPOs in the AI space, we're not in a bubble yet. This is the story, the challenge, the catalyst that the market is expecting to move this economy forward.
And as I'm fascinated to hear if Jensen doubles down on his bullishness for robots. Now, he's teased this at various events. I'm seeing more of these creepy looking robots float around on my LinkedIn feed. But look, it sounds like it may be another growth avenue that markets aren't thinking about for Nvidia.
100%. And we have seen the robot story coming out of robotics coming out of Tesla. We have seen it coming out of China as well. This is the next sort of frontier robots. You saw Adam Jonas that's now focusing on that as well. So this is going to be very interesting. If he does go into this and lean more into this, that's the next, beyond data centers, now it's going to be robots.
Kenny, is it as simple as saying that Jensen shows up on our network, black leather jacket, buy the stock tomorrow morning?
Listen, he shows up with that black leather jacket, whether it's good news or bad news. I would buy that jacket, have the opportunity. I'm curious what people would pay for it. But look, when I think about robotics, I can't but help go back and think about the Jetsons with Rosie the robot. We are there, right? Pretty soon, everyone's going to have a Rosie the robot in their house.
Not to be the bearer of bad news, but I want to switch a little gears to retail. Brooke, these results this morning out of PVH last night, I should say, Abercrombie & Fitch this morning. Now, PVH, I caught up with CEO Stefan Larson saying men's underwear at Calvin Klein is off the charts. They saw double-digit growth there because of their Bad Bunny campaign. Sales were good. Abercrombie sales were generally good, Hollister notably, but it's the tariff impact. PVH calling out a $1.15 per share impact this year from tariffs. Abercrombie, $90 million impact. I think people forgot that tariffs matter.
Yeah, absolutely. And that's largely what's been part of the discussion, especially when it comes to retailers. And the key word here is their mitigation tactics. And right now, the Abercrombie & Fitch call is underway. And that's exactly what we're hearing. The key ways that they plan to offset the tariffs. They said, quote, on the bottom line, we've adjusted our operating margin and earnings per share outlook to reflect the second quarter performance and revise estimated impact from tariffs net of those mitigation tactics. Of course, things that they've done, similar to what we've heard from other retailers, is shift global production, enhance supplier contracts, relationships, managing operating expenses, determining ways to ultimately lower promotions and lower clearance selling. And what I'm hearing from so many of my sources is that, it's this gamble that retailers are taking right now, where there was so much fear and so much nervousness among consumers about how much prices will increase, that these retailers led into promotions. That certainly brought in some foot traffic there, especially we saw Hollister, something like up 19%, led by Gen Z and teens. But on the flip side, it's hitting their bottom line. We do know that because they really leaned in, that definitely took a toll on margins.
And what has amazed me is that for the past month, maybe month and a half, we talked about a slowing job market, consumers hit over the head with various price increases from various companies, restaurants, retailers, you name it. Yet here we stand this morning. We've got Hollister division, essentially young people who are not supposed to have any money, sending sales up at Hollister up 19%. PVH seeing double-digit growth in various parts of Calvin Klein. Tommy Hilfiger very good. I mean, the consumer is still alive and well.
The consumer is still alive and well, and there's a couple of tailwinds, which basically, look, back to school, the consumer is still going to be spending on kids, and they're expensive. As far as PVH, they're saying that they're expecting this year still to return to growth. So these retailers have been navigating the tariff story, the tariff challenge. They have been trying to navigate it. And then you have retailers that have also been talking about the consumer wanting more value, the consumer wanting less expensive options. On the Kohl's front, by the way, their Sephora tie-up has been very good for foot traffic. Their Babies R Us as well. So these tie-ups between retailers, it looks like it's going to be important going forward. And I will add also that just taking a look at Kohl's and also Abercrombie & Fitch, those were highly shorted stocks as well. So the market maybe wasn't anticipating that Kohl's would come out with the results that they did, and that's why part of the reason why you're seeing part of a short squeeze there.
Kenny, real quick, last word to you. 50% tariff headline on India crosses the wires. Why is this market getting slammed?
Because I think the market, it didn't hit us from left field. We knew it was coming. We've been talking about it for weeks. I think the market has settled in with it, right? Now, that doesn't mean that we're not going to have trouble in the weeks ahead once we kind of see how it all flows in. But right now, the market's not going to react because it's not new news.
My roundtable is sticking with me because we're just getting started. Lots more to come on opening bid. First, I have the details on a brutal call on one beer maker stock, despite it already trading at a 52-week low. And two, my stock of the day is none other than Cracker Barrel. I have done a condensed research report on this lightning rod of a brand as it continues to get shredded on social media because of its logo flip-flop. We'll be right back. All right, welcome back to Opening Bid. I'm keeping a close eye on shares of Corona and Modelo beer maker Constellation Brands. Shares of Constellation Brands are now hovering near a 52-week low as investors fret about declining alcohol consumption by young people, GLP-1 drug impacts the industry, and weak demand by the key Hispanic demographic. Stock is down 28% this year. Bank of America analyst Peter Galbo thinks the stock drop will continue and has slashed his rating to underperform from neutral. Galbo thinks all the concerns I just outlined will persist and the stock is far from cheap, says the analyst. We believe consensus has become complacent. Wow. And the argument of valuation is cheap is unwarranted given multiple premium Constellation maintains versus multiple Molson Coors, despite Constellation being a largely landlocked U.S. business. Interesting stuff. All right, let's turn now to our stock of the day, and drumroll please, that is Cracker Barrel. The beleaguered restaurant chain will revert back to its old logo after outcry from right-wing activists, social media uproar, and a Trump reprimand. Some of you may not know this, but I was a sell-side analyst for 10 years covering retailers and restaurants. So this Cracker Barrel debacle has reawakened the inner analyst inside of me. So I want to put forth a condensed version have a research report for you on this one, totally free. First is a dose of company-specific analysis. My takeaway from doing this component is that Cracker Barrel has been a challenged business well before this logo dust-up. Sales have barely grown the past 2 fiscal years. Operating margins were once double-digit percentages, now are single digits. Earnings have dropped for 3 straight years. Biggest challenges the brand is facing, and there's many, none of the stores are franchised. Rising worker and ingredient costs, like eggs, a low $14 average check size, 83% of the stores are near interstate highways, only 20% of the business is off-premise. It's hardly opening new stores, and healthier lifestyle is not a good fit for this calorie-busting brand. And then a few analytical intangibles to consider that I don't think are favorable. Embattled CEO Julie Fells-Massino is only a marginal shareholder in the company. In fact, former CEO Sandra Cochran is still the largest individual shareholder. Theoretically, that should be the other way around. The company is aiming to spend a whopping 55% of its market cap, or $700 million, on its revival plan. Wow, that's a lot. Same-store sales are lagging behind the broader fast food industry. And yes, Cracker Barrel isn't a pure play fast food player, but it's an important comparison to make. The company is also underperforming many sit-down restaurants, especially the resurgent Chili's brands. Well, a lot to get here. Still with me is my roundtable of pros, Ken Polcari, Brooke Palma, and Inez Ferre. Kenny, what say you? Any interest in buying this dip on Cracker Barrel?
No, I have to be honest with you. I don't think I've ever been to a Cracker Barrel. I grew up in Boston. I live down in Florida. I've never been to one. I understand the dust-up. I get the whole thing with the logo, but it was never a space I was in, so I would not be an owner of Cracker Barrel. I wouldn't buy it. I wouldn't own it. I've never owned it, so no.
Kenny, I see you. I mean, you're really in shape here. I mean, you're not in these 1,000-calorie breakfasts anymore, so I get it. I hear your perspective. Now, Brooke, you have talked to the CEO of Cracker Barrel. What have you learned? You've talked to her in the past, but what have you learned from talking to her about her revival plan?
Yeah, well, let's be clear. Julie Fells-Massino, she is a marketing executive. Her background comes from Taco Bell, and she took on the helm of Cracker Barrel in 2023. And what we know, based on the many times that I've spoken to her over the course of this past year, is that she is leading this 3-year transformation plan that's currently underway. And this announcement was announced, this logo change was part of a larger announcement that came out on August 19th. And we've seen these major stock moves over the past, call it, say, 8 to 10 days, because of the backlash that the company has got. This was not just a brand logo refreshing. This was also a leaning into larger advertisements, a partnership with country singer Jordan Davis. This was part of a change, a big major plan at the company to get, key this, Gen Z consumers back in the door. They also do have that retail shop. People forget about that sometimes. It's not just for food. There's also that retailer as soon as you walk in the stores. And we know that they've been getting a lot of buzz last year on social media as people were talking about going into Cracker Barrel, looking at the apparel. And so this was part of a larger plan, and perhaps this could bring back foot traffic now that we're back to the previous logo. At least that's what one analyst on the street, John Tower, is saying over at Citi.
Yeah, about 1/3 of Cracker Barrel's merchandise that it sells in its stores actually come from China. Also not another good look in this climate here. Inez, have you been to a Cracker Barrel before? And I guess I can't really say I'm surprised by this social media uproar, but what this has done has reminded me how some other fast sit-down traditional diners are doing. I mean, I look at Chili's posting double-digit sales for the past, I believe, past four quarters.
I have been to one once before, and as you mentioned, it was next to a highway, and that was the only place that I could go to. But definitely, look, the stock is right now up, so this has been great publicity for the stock, even though it has been sort of that negative publicity. But this just goes to show you that there is some sentimental value to logos, and if they want the Gen Z consumer, perhaps rather than taking off the guy on there, they may have been putting him on in a t-shirt or something a little bit younger. But hindsight is 2020 for anyone that's watching the marketing drama that has surrounded this stock.
Yeah, apparently they also sell a lot of rocking chairs inside of their stores. I haven't seen a rocking chair in somebody's home since it was 1985 and my mom had it. Shout out, Mom, I know you're watching. All right, let's fire up my question of the day. Apple has made a huge push into India in recent years. In fact, the tech giant has reportedly increased production at 5 of its factories in India as it prepares for the launch of its new iPhone 17 models. At the same time, Apple's pledged to invest $600 billion in the U.S. over the next 4 years to improve American manufacturing production. Basically, Tim Cook's efforts to appease President Trump. My question is this: How much headline risk is there to Apple stock because of its India push, seeing as the president is tariffing the country now at 50%? Kenny, I mean, how risky is Apple here? Looks to be exempt from these tariffs, but still, it's still making a lot in tariffs, and the president is not happy.
Yeah, no, he's not. I'm not so sure that there's a ton of headline risk in Apple because they shifted some manufacturing to India. I'm not really concerned about that at all. Look, they've got a big plan in place over the next couple of years with a whole redesign of their iPhones. It's going to be very exciting for Apple. So the India tariff thing is not going to prevent me from owning Apple on a pullback. We own it now. I'd own it more on a pullback.
Inez, Apple is the tech stock that has seemingly gotten forgotten. So much focus on Nvidia, but I think it says a lot about Apple here. While they're globally exposed, they just have lost the AI narrative.
Yeah, and that is one point that Laura Martin over at Needham has talked about before, is that what it should be more concerning is AI and their efforts in AI and their efforts going forward so that they don't continue to lag, and also so that their talent doesn't leave the company. So perhaps on the tariff front, Tim Cook has been very good at diplomacy and being able to negotiate with the administration and get those tariff exemptions. But on the AI front, that's what the street should really be, what investors should be focusing on.
Kenny, what does Apple need to do to get back in the good graces of investors, besides just saying something on AI that it may have an improved Siri at some point?
Listen, I'm not so sure that it's fallen out of the good graces of all investors. I think there are some that are maybe concerned that it's a little bit behind in the AI race. But listen, I would not bet against Apple. I think they've always been behind, kind of as they've been evolving, but they always end up coming out on top. And I'm in this place where I think Apple's going to be just fine. So I think if they continue to do what they're doing, we're going to see these new developments, these new iPhones over the next couple of years. We're certainly going to see more news on their AI efforts. So I'm all in on Apple.
Kenny, last word to you here. Does Nvidia beat by 5 cents or more?
Oh, yeah, more.
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 You're looking for a big beat.
I'm big beat. I am such an Nvidia fan. More.
Inez, real quick one to you. What'd you order from Cracker Barrel?
I can't even remember. I'm sure it was something like cheese, like was something like something with cheese on it.
Fair enough. That's what you would get.
Right?
For a Cracker Barrel. I mean, you get a little bit of everything here on opening bid.
Can I just say one thing about Cracker Barrel to Inez's point? The stock is up, 2 points or 4%. Is that just because they went back to the prior logo? Yeah. Is that why people are buying it, because of the logo? Not even the business?
It's because people are buying stuff with cheese on it, Kenny. All right, a big thank you to my roundtable. All right, Kenny Polcari, Brooke De Palma, and Inez Ferrer. Y'all just crushing it. All right, my forward-looking thought is a long one, but I think it's an important lesson. Always view a first-time CEO skeptically, no matter their pedigree. And here's why. First-time CEO often comes in with the mindset of something to prove. They are quick to surround themselves with people that they have worked with in the past. It's both an effort to surround themselves with proven commodities, but also the yes people they need to get things done quickly in the early going. Then poof, 6 months later, the new CEO comes out with a grand plan that, in their view, is absolutely amazing. They can't miss at fixing whatever is wrong with the company. A lot of times, that original plan just doesn't work, forcing the new CEO to either swallow their pride and adjust or dig in their heels at the expense of delivering prolonged poor results. The new CEO that acknowledges early mistakes and moves on for the good of shareholders is the one you should give a shot to, and perhaps view less skeptically if the results turn the corner. The hard-headed new CEO is the one you don't want to see driving the car. I bring this all up in light of the Cracker Barrel debacle. Only time will tell what new CEO Julie Fells-Massino will end up being, but I will say this. Just the fact a former top CMO at Starbucks even brought this logo change to market in the current political climate is a red flag at this stage in her tenure. I do wish her luck, though. Straight ahead, Ali Cannell has you covered for Market Catalyst. I'll be jumping back into the live stream at 10:15 for a big chat with Abbott Labs CEO Robert Ford. I'm very keen to hear about how the pharma play is navigating President Trump's tariffs. We'll be right back.